Coming up in today's video, we'll be talking about the S&P 500, which is hovering near all-time highs. We'll discuss gold, which is doing the same and continuing its massive rally in recent months. Silver, which is also making a massive breakout. Yields trending lower. And we'll talk about whether or not the dollar downtrend could give way to an everything rally. Is everything just going to move higher from here? Not to mention Bitcoin just shy of an all-time trading high. Things are heating up in the markets, and in this video, we're going to be discussing top setups going forward. Up first, I want to talk a little bit about the S&P 500, but I wanted to share this chart with you, which shows that during weeks where there's no news, it's actually historically a pretty good time to be bullish on the stock market. So uneventful macro weeks equal best weeks for stocks, and this shows the median weekly return based on the number of key macro data releases during the week, 2014 to present. And you can see that again, when there are zero expected moves, you get an average 0.62% return. That's not bad. Let's take a look at the S&P. And while there are no big macro events this week in terms of like a big CPI number or jobs data point, we do have a key one happening tomorrow after the bell, and that is Nvidia. I talked about it yesterday, but just to reiterate how important this is, the market has been rallying a lot this year on earnings, like really strong earnings. And a lot of that hype comes from the tech and AI rally that we've seen. The idea that, chip companies like Nvidia are seeing massive demand from companies, perhaps not just in the technology space, but eventually in the broader market as companies use AI to leverage their workforce and potentially to even cut costs, etc. AI is a really powerful trend this year for the financial markets, and leading at the helm is Nvidia. Tomorrow we'll see if we can break through these highs on good guidance, but let me tell you what the market needs out of this. In order to continue, in order to see a leg higher in the S&P 500, what you need to see from Nvidia is a beat and a raise. What I mean by that is they need to beat the expected numbers for their earnings. We can pull that up. The estimate is 5.6, here on their earnings estimate. The question is, are they going to beat that number? And also, are they going to raise forward guidance? That is really what the market wants to see. And if that does happen, Nvidia very well could break through this and maybe even make a stab going into the 1,000 mark, reaching an all-time record high. And as we take a look at the S&P 500 here, again, we are trading above previous resistance around the 5250 mark. Let's see if we can stay here. If we can survive through Nvidia's earnings with strong numbers, even if Nvidia comes out poor, it, in my opinion, still could produce a decent buying opportunity on a pullback. I think Nvidia just has this indestructible nature to it right now that, of course, can change if semiconductors really fall out of favor. But again, to me, I'm a buyer of pullbacks when it comes to the market right now. I do continue to hold VOO in my account. Let me pull this up here just to show you P&L wise where we're at. So here is VOO. I bought the pullback in April and continue to hold on to this position. Again, if we do get a pullback on the indices, if we get a pullback in the S&P, I am kind of I probably won't add to my position, but I'll just continue to hold unless we significantly break lower for fundamental reasons. Take a look at the NASDAQ. Again, same story. Things look really good. We are above key levels of resistance. And remember that breaks to all-time highs, I usually view them as positive things. Yes, the market is arguably a bit expensive on an earnings basis, but again, I think a lot of our fears in the market have been washed away. Notably, one of the big fears was the idea that yields were spiking. And that idea is basically, remember that if yields are trending higher, I'm talking about like the US 10Y, you can search that up on your chart, that's showing that government bonds are losing value because people are expecting or demanding higher yields in order to buy those bonds. Higher yields implicate that the market thinks interest rates are going to remain high. So why buy a bond now when, again, the interest rate that's offered from the Federal Reserve, that's what it's all about. It's what are they offering? What do people bid on? And right now we see that the bid for bonds has come back in. That's why yields have dropped a little bit. As long as that continues, I think everything can continue to rally, and not just stocks or bond prices, but perhaps even things like gold. I think that the rally sustains itself as long as we continue to see falling yields. And Bitcoin too. I think Bitcoin, as crazy as it might sound, could break through those all-time highs if we continue to see yields not being a threat. So keep an eye on the yields market. It's very, very key to understanding, how strong is the economy. If the economy really heats up again, it could lead to inflation problems coming, and again, yields could start climbing again, which would be problematic to this concept of an everything rally. So let's take a quick look at some of the top setups on the Edge Finder right now. We have gold, the euro, the pound, and bonds getting bullish readings overall. Same thing with the DAX, euro Aussie, euro yen, euro CAD. On the bearish side, we do get Bitcoin as a potential bearish setup. Again, I'd be looking for a technical confirmation before anything there. You've got NZD CHF, Aussie CHF, the Russell, silver, dollar Swiss, copper, oil, USD ZAR, USD CAD. These are your bullish and bearish readings currently on the Edge Finder based on the sentiment data that we study, technical data that we study, and economic data that the Edge Finder pulls in. These scores are being automatically generated all the time throughout the day by the Edge Finder's system. If you're not familiar with the Edge Finder, it is a tool that allows traders who are looking to incorporate fundamental analysis into their trading more easily access this data. So again, inflation data, for example, you could pull up charts on this. If you're looking to understand jobs data, you can pull up charts like that, GDP numbers. This stuff may be a little bit daunting, but I promise you, if you get a tool like the Edge Finder on your side, you can way more quickly kind of flip through these data charts and start to really pick up on the true story of what's causing the markets to move. Fundamentals are so key to the full picture because they allow us to see what's really driving the market. The market is not moving based on a head and shoulders pattern. It is moving strictly and strongly based on economic data and projections for what central banks may choose to do next. And that's just point blank period. We watch that day in, day out on this channel. And again, if you're on that train, make sure to hit the thumbs up button on the video. And also, just a little bit of a public service announcement. We are giving away a free copy of the Edge Finder. And if you'd like to enter for a chance to win, there will be a link pinned below on this video, or we'll also put it in the description as well. It takes 2 seconds just to join the giveaway. Just put your name into the raffle. And again, we'll announce a winner on Friday. Somebody will get a free copy of the Edge Finder. So stay tuned for that, and good luck. I hope you win. So back to gold for a second. We've seen a little bit of interesting price action the last few days. We did top out around an all-time high of $2,450 an ounce. We have since pulled back a little bit and gone sideways, although this sideways action has been pretty volatile. You've seen back and forth movements. And I made this point pretty clear yesterday in one of my videos, so I won't go in too much length, but I've pointed out that I remain bullish on gold unless we break support around 2,400. My stop loss is trailed on my position, and I'll show you the current P&L on this trade now. So here's my GLD trade, which is an ETF that tracks the price of gold. It's up just shy of $16,750. So we'll continue to watch this one. Again, my game plan on gold is trail a stop on this one as long as it wants to go. And if you're wondering, Nick, are you thinking about trailing your stop loss here? I am, but what I'd like to see first is I'd like to see this price actually get back to the highs and break through that. If we do start to see that form, then I'll go ahead and take my stop loss and move it just shy of this low. The reason I'm not doing it just yet is because I do actually think that it's possible that gold just kind of ranges sideways here, and I want to remain in the trade as long as we don't break this kind of level of support that we see looking left on the 4-hour chart. So that's my current analysis on gold from my price action standpoint. The real reason I'm in this trade, as mentioned earlier, is based on the fundamentals. Economic data seems to be slowing, not just in the US, but globally. We saw inflation reports out of Canada this morning. Let's pull those up. So here's a look at the inflation data that we got from Canada. We saw the consumer price index year over year come in at 2.7%. This is in line with expectations and cooler than the previous one at 2.9%. So following in the footsteps of the US, it does seem like Canada is seeing some inflation cool down. And if that becomes a broader theme, not just in the US, but also in Canada and in Europe, which it's already been a theme, the UK, etc., that all lends, in my view, still towards a bullish case for gold. Remember that rate cuts, not just from the dollar, but also from other central banks like the Bank of Canada, like the ECB, those are positive things for the price of gold. More stimulus going into the system, more currency, fiat currency being printed. is usually considered a bullish thing for gold, especially when it's also coupled with slowdown in the economy, which is why we're seeing, I think, this really strong rally that I think can sustain itself for gold. Again, a lot of traders right now are trying to bet that the high is in for gold. They're trying to bet against this rally. I've seen it all over Twitter. People are in a lot of trouble trying to short gold. In my opinion, of course, things could reverse by the time this video comes out, but my opinion is that gold remains supported. I think gold goes higher, and if it doesn't, I will trail out and take my profits on this trade that I've built over the last month or so here. Pulling up the euro against the US dollar, what we can see is that we saw a little bit of a momentum breakout here, and it seems like the trend has flipped to the upside off of the recent weakness in the dollar. This actually looks like a strong trend that, in my opinion, could continue for a little bit. If you're looking at this, let's actually add some levels of support here. If you do get a pullback in the euro, I think that could be a healthy thing. We've seen a little bit. If you're very aggressive, maybe we're looking at just a very brief minor pullback before the euro continues higher. But to me right now, the path of least resistance for the euro remains higher. And we also see that confirmed with the Edge Finder's top setups, again, giving us euro USD as a very bullish reading for the last few days and weeks. So again, if you've been on that trade, or you've also caught pound USD on the Edge Finder, then awesome, congrats. We'll see if that continues. If we take a look at the pound USD, similar story. We broke out of key resistance here, and to me, the zone to zone concept here looks pretty favorable. Maybe a move back up to 1.28 on the pound USD could be in the works if we continue to see this trend play out. Now, again, that's not a guarantee that this is going to happen. I want to reiterate this because I know that there are traders who come along who are new to this stuff, who watch my videos. I'm never 100% certain about any trade or idea that I share. I don't think, that's a very smart thing to do in the financial markets. You're going to get it wrong sometimes. You're going to be right sometimes. What counts the most is that you manage your risk, and when it works out, you make it count. You hold on to good trades. You get rid of losing trades. That's what's worked for me over the years. And again, that's when I share these ideas. I'm not convicted 100% of anything. When I'm in a trade, I'm very, agnostic to what happens. So with gold, like for example, this trade that I'm still in, if it gets taken out, then okay, I'm out. We take the trade and we move on. But if it continues, I continue to manage the position as responsibly as I can, and try and let a winner run within reason. So with that said, guys, if this video was helpful to you, make sure to hit the thumbs up button. Remember, join the Edge Finder giveaway. It is free to join. The link is in the description and pinned comment down below. Have a great day. We'll see you next time. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, Eightcap. Eightcap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your Eightcap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out Eightcap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.